Steve Hanke, professor of applied economics at Johns Hopkins University, has a new way of predicting the gold price. This is an indicator he's built in conjunction with one of his colleagues. We're going to be talking about the Gold Sentiment Index. And Professor, you were telling me offline, I don't think anybody's done this before, using the metrics that you've compiled to predict the price of gold. Tell us about this index and how it's constructed.
Okay, David, let me just ramp into this very quickly, and that is if you go back to the 18th century, you had Adam Smith and The Wealth of Nations, Theory of Moral Sentiments. His first book was about sentiments, and we're talking about sentiments. And so the classical economists thought this was important, but they never really were able to work it into the economic analysis. Then you had Keynes coming along, and Nobelist Friedrich von Hayek in the 30s and 40s, and they said sentiment and confidence was very important, but it really wasn't worked into economic analysis. And then the new modern phase kind of started with surveys of consumer confidence, and those surveys are leading indicators of where the business cycle is going. And that, let's say, was 50s, 60s, and 70s. We still have it, obviously. But the latest phase is actually looking at the news articles to see what the sentiment is in general and how that might affect the general business cycle and the general market conditions. And one interesting book that's just come out, I'm going to hold this up for you. Nobel laureate Robert Shiller has written a very interesting book, and I'm holding it here. It's Narrative Economics. And that gets into these general measurements of whether news articles are positive about the economy or negative about the economy. But, and also I might add that the San Francisco Fed has done some work on this. And you've got other indices about policy uncertainty index, for example, that Steve Davis at the University of Chicago and his colleagues at Stanford have been doing. And all of these things are looking at what's actually in the news, and we can do this with programming. I mean, it isn't that we've got somebody with a green eye shade on reading 1,000 newspaper articles and then coming up with some judgment on the thing. We got a computer doing this with programming Python, and the Python will wrap around whatever it is and get what we have done, which is taking the whole thing another step, and that is we're not talking, when we analyze the news, about the general sentiment as it affects the market in general or the economy in general. We're looking at a particular price discovery process and a particular price of a commodity. This is the first time this has been done. And gold, of course, is the most important price of any commodity in the world. Mm-hmm. So that's why we chose gold. So step one.
What makes your sentiment index unique? Well, besides the fact that no one's applied sentiment to gold yet, but talking about other people's work, the Robert Shiller's book that you mentioned, for example, how is this index unique? Tell us about this chart that we're looking at right now. How is it constructed?
Okay, so here's how it's constructed, and the reason that's unique is that it talks about a specific price of a specific commodity.
Yes,
and that. All these other things that I've been talking about are general measures of sentiment. We are measuring what the state of play is in sentiment in the gold market. Is it bullish or is it bearish? And we do that by grabbing off every article on Google that comes up every hour. And so number one, about gold. So we know the frequency with which articles and commentary is coming up about gold. The next step is to let Python work on specific words that are in the text themselves of these articles to determine whether those are bullish or bearish for gold. So we have the frequency of the stories on gold popping up, and we, in addition to that, we know whether the story, given our word search, specific words, whether the article is bullish or bearish. Then we
Okay.
put it into this. Then we put it into this Hanke Gold Sentiment Index score, and this little dashboard that you've got up there is easy to understand. If you go back and you look at what was going on from February until the end of March, all the news, it was very negative. And look at that negative score over on the left-hand side. Okay?
Yeah.
That's March. The end of March, minus 6.4. And the gold price had dropped down to 1684 per ounce. Since then, the thing has continually swung around, and sentiment's gotten less and less bearish and more bullish. And now we're in a bullish zone on the right. The reading we have up there is for the 18th. It's plus 6.7 on the Hanke Index. And the gold price on the 18th was up to 1869.32. Mm-hmm. So this is a leading indicator. We have three things that we look at in a market in the price discovery process. What are the fundamentals? Well, the fundamentals for gold, in my opinion, you know, I've been on this program 1,000 times talking about how bullish I am on gold. That's fundamental. Technical analysis is looking at the patterns of prices in the past, how they've been behaving, and trying to determine how they're going to move in the future. We are adding a third new component that's never been added, and that is, what is the sentiment in the market? What are people feeling? Are they bullish or are they bearish? Well, they're bullish right now.
Okay, so we're gonna get into the specific pattern here. Before then, Professor, your assumption rests on, well, your model rests on the assumption that the media overall have been portraying sentiment accurately, I suppose. I mean, I can speak, you know, I can ask this because I am part of the media, right? I mean, I say this tongue in cheek, but what's stopping somebody like me from simply manipulating your index by publishing a bunch of bearish stories or a bunch of bullish stories?
Okay, this is not a subjective kind of thing. It's an objective measure of what is in the media.
Yes,
and that's what counts. Whether it's fake news or solid, based on solid fundamentals or not, is irrelevant. The question is, what is in the news? What do people read? What do people see? And that affects their sentiment and their behavior in the markets. And as you can see, in this case, if you look at this chart, the gold line is the price of gold. Okay, the blue line is a Hanke Sentiment Index. And as you can see, from February until the end of March, that thing was going down. And in fact, on March 25th, you have a double bottom down there in that blue line. That's the sentiment index. That's a double bottom. That's a very significant, telling technical factor. It indicates that you should be buying gold on the dips. It made a double bottom, and that suggests that sentiment is going to be going up, and that suggests that gold will be going up. And look at that. The sentiment index goes up. In the free, all the way through. This is an 80-day moving average. That blue line, up.
It looks like it leads the price by about 2 weeks. Is that accurate to say? It usually leads it by about 2 weeks.
Well, it did in this case. Let's just say it is leading it, and we're not getting out into the weeds of and doing some kind of technical statistical analysis to get exactly how many days it leads and that kind of thing. It is leading.
Professor, can you share with us a few of the key words that you screen when you gauge sentiment?
Yes. For example, let's look at bullish words for gold.
Yeah.
Higher inflation. that phrase, the word inflation, deficits, volatility, weaker dollar, quantitative easing, super cycles. Remember super cycles? I think in February, I did flag this as a fundamental factor that I thought we were entering a commodity super cycle, and gold would probably be involved in the thing, if you recall. So super cycle is one. The bearish words, Fed tightening, COVID recovery, strengthening dollar, hike rates, lower inflation, bearish gold, gold dip, gold sell-off, so on. So you got hundreds of words, and of course, our good friend Python allows us to do all of this, setting back in the office, not reading with 1,000 articles and trying to decipher all this stuff ourselves.
No, you got a cage full of monkeys reading through the ledger of these these printed articles. Professor, what is your current sentiment personally? If I were to write an article about our interview today, which I'm going to do after the interview, which of these key words that you mentioned would I be using to describe your sentiment?
Of course, you know very well, I love inflation because the money supply has exploded. I think the velocity of money will be picking up, and we're going to be in for inflation that's at least 2 or 3 times what the Fed's target of 2% is over the next 2 or 3 years. So we're going to have a lot more inflation in the picture, and that's bullish for gold.
Absolutely. Okay. All right. And do you have roughly an idea of how much higher gold could climb? And that's the other component to this index. It doesn't project the growth rate or the decline rate of gold. Does it? It simply shows you the sentiment.
It shows you the sentiment and suggests whether gold is going up or going down. The sentiment score now, put that dashboard back on, and you'll see right away it's over. The dashboard is where? It's in the green zone. It's over in the right. It's positive. And that means gold's going up. And if you're trading, who cares where it's going to? The point is, if you want to be long because it's a price that's going up. So we'll worry about selling it when we see the dashboard going negative on us. Then we might get a sell signal. But who cares about a particular level? You just know sentiment is positive, fundamentals are positive, technical analysis is all positive on gold. The price of gold is going up. You want to be long, you stay long, and if you want to worry about lightening up or selling your position, you would not do that, certainly, until the sentiment index went over on the red side on the left on that dashboard and got negative.
Professor, generally speaking, though, on sentiment, it doesn't have to be sentiment on gold. It could be sentiment on anything. A sentiment indicator, is it not based on prices that have already, price movements that have already transpired? For example, let's take gold. If gold were to crash tomorrow, well, my sentiment after that crash could be quite bearish. Would it not be?
Well,
I mean, most people react to what's already happened.
We don't. What the news in the market, it's a mixture of what's happened historically, but it's mainly articles about where you think gold is going. In other words, on Kitco, how many people do you interview on Kitco and ask them about the history of the gold price? You ask them about where they think the price is going, what they expect in the future. That's what you report, and that's what newspapers report. They want to know, and people want to know, what's going to happen ahead of me. They don't want to look in the rearview mirror on things. They want to look out the front windshield.
Okay. Well, Professor, I know you are personally bullish on gold, so I am looking forward to having your commentary contribute to this bullish sentiment index right after we publish it. Well,
what we want to do is keep track of this thing on the dashboard Hanke Kaufman Sentiment Index.
Absolutely.
And obviously, if that thing starts going left on us, and getting down negative, we want to be on Kitco again.
Absolutely. And of course, if you turn personally bearish on gold, I love to talk to you about that as well, and why you've turned your stance.
I'll text you immediately, David.
Thank you very much, Steve. All right. Thank you for sharing your index with us. Have a great day.
Okay. Thank you.
And thank you for watching Kitco News. I'm David Lin.